Alright, greetings. We're going to take a look at the problem set that's posted. It's the November 1st problem set. It deals with ROI and residual income. One thing to keep in mind whenever we're looking at ROI, the ROI formula is just return, which is often net income or operating income divided by investment. Right? That's the whole formula. One thing that ROI does is it decomposes into pieces, right? So the first piece, what's known as margin, is the profit or net income divided by sales, and then take that whole thing and multiply it by a second piece, which is called turnover, sales divided by the investment. That's a useful formula to have at your disposal for the third exam. Let's make this a little bit bigger and then look at this particular problem where we don't really need to decompose the ROI formula. We're given what the net operating income is, $700,000. All right, so if we're looking for ROI, we need this $700,000. We'll use this top formula here. Net income is $700,000 divided by investment, right? And that's the one place where you have to do a little bit of work, because the problem tells you average operating assets are $600,000, but they're thinking about buying this new machine that will increase the assets by 8%, right? So if we do that, then the investment will go up. Right now, the investment is the $600,000. And if we increase it by 8%, that's 1.08, will tell us what the new investment total will be. We'll wind up with $648,000. And so return on investment will be $700,000 divided by this 648, and that gives us answer C, 108%. All right, so one thing to note there, like while that's just a problem, it's the reason why companies often don't want to invest and upgrade into new, maybe safer machinery. Like if it's going to cost money to do that, it'll drive your ROI down. But in terms of just a numeric problem, that's all there is to it. The return on investment story. Problems 2 through 4, kind of a simple ROI problem. Again, we have a company where there are sales, net operating incomes given, and average assets. The first part of the problem says, what is this company's margin for the year? All right, so that's the place where we need that decomposed formula. The margin is the first part. Margin is equal to that operating income of $500,000 divided by the sales of $2 million, or 25%, which is answer C. You think that's pretty easy, and hopefully that's what you feel about most of these problems in chapter 12. All right, second part of the problem is, what is this company's asset turnover? Right, so ROI equals margin times turnover. This first bit is the margin. The second bit, turnover, is equal to the sales divided by investment. Right, that's the definition of turnover. In this case, we're given sales of $2 million. Divide that by average operating assets of $1.2 million, and you will get 1.67. Right, so again, $2 million in sales divided by 1.2 million in average operating assets. 1.67 is the correct answer. All right, and finally, what is the company's ROI? Now, one thing you can do is multiply those two numbers together. 25% times 1.667 is answer B, 41.7%. It's the decomposition, or in a more straightforward fashion, income divided by operating assets. So 500,000 divided by 1.2 million will also give you this 4.17 as your answer. Okay, number 5 is a word problem. The problem says, all else equal, let's get it up here, which of the following items will increase? And so if you're taking the test and think I want to highlight a word for myself, underline the increase. What will increase ROI? Will decreasing income? No, it won't. And again, having the formula just staring you in the face is probably useful here, right? Like the whole ROI with the margin piece, right? The net income or operating income divided by sales. Sit there and look at the formula. And second piece is turnover. Right, will any of these things increase ROI? Decreasing net income definitely won't do it. Increasing fixed costs, that won't do it. That will hurt net income. Decreasing average operating assets, actually that will do it. Right, if you make this number smaller, we go to the kind of basic version of the ROI formula where it's just the income divided by the investment. If you make the denominator smaller, that will make ROI bigger. It hints that you're using fewer resources and ostensibly making the same income. C is the correct answer to this particular question. All right, so far pretty straightforward questions, and for this chapter they are. So next one, number 6, is this Duncan Limited. Here we get similar information. It says Duncan requires each of its divisions to generate a minimum return of 20%. What is residual income? All right, so this is the first time that we're seeing residual income in this problem set. Residual income similar to ROI, and as we talked about in class, residual income, let's spell it correctly, is equal to profit, where that looks like accounting profit, but you want to subtract away this penalty, right? So it's profit minus a penalty for using resources, right? So there'll be some interest rate that you'll multiply by investment, and that's what residual income is equal to. All right, so here we have operating expenses and revenue. We could take the revenue and subtract the operating expenses to get our accounting profit, right? So this 3 million divided by the 1.75 million would give us a profit of 1.25 million, and we want to subtract from that the rates, as this company wants a minimum rate of return of 20%, and multiply that by the investment, where the only investment we know of is those average operating assets of 4 million. All right, so that's the problem. Residual income is equal to 1.25 million minus 20% times the 4 million average operating assets. That gives you $450,000 worth of residual income. As we talked about during class, anytime residual income is positive, that's a good thing. All else equal, you would engage in this project, right, and invest in it. $450,000 of economic profit. All right, next problem, very similar. Shannon Company, same sort of setup, and residual income is requested. And so just go copy this and bring it back down here. All right, residual income, in this case, 10 million in sales minus the operating expenses of 4.5 million means that you have a $5.5 million accounting profit, but you need to subtract away the penalty for using resources. In this case, the company wants a 30% minimum return, and they're giving you $4 million worth of operating assets to work with. When you subtract that 1.2 million from the 5.5, you get 4.3 million, which is answer B in this case. Alright, let's take a pause and see how we're doing on time.